still coming to you from Africa Oil Week, which is still underway here in Cape Town. Good to be back with you as always. Now, over the past few days, we have heard a number of African countries announcing new projects and deals and licensing rounds for companies to explore oil and gas finds in their respective countries. Of course, the ultimate objective of this being economic development and the provision of a basic electricity, which remains a key constraint in many African countries in terms of growth. But now these projects are not small by any scale, and they are not cheap. They will require a lot of money, running into the billions. And therefore, this morning we will be unpacking the issue around funding and looking at the appetite of lenders to fund these projects, and also trying to find and ascertain what they require from investors in terms of dispersing of their capital. I would like to, at this stage, introduce my esteemed panelists who have got vast number of experience in the areas of finance, beginning with Shirley Weber, who is the Managing Principal and Head of Natural Resources for APSA Group. Keaton Hirishand, Co-Head of Advisory and Project Finance at Societe Generale. Gilbert Kamuntu, Chief Commercial Officer for the Uganda National Oil Company. And lastly, Aaron Singe, Chief Oil Sector Officer at the African Development Bank. Of course, we do have audience members here with us at Africa Oil Week who will hopefully be joining in on the conversation. You can do so too by using the hashtags Africa Oil Week and also hashtag AOW2019. Let us get straight to it, and I'd like for us to begin by introducing ourselves to the many viewers watching this live broadcast across the continent, and of course to the audience members. Shirley, beginning with you.
Good morning, everyone, and good morning, Fifi. Shirley Weber, I look after all the natural resources, projects, and clients in Africa, and that includes mining metals, oil and gas specifically, as well as the trading of those commodities. Thank you.
Thanks. Keaton?
Good morning, everybody. So I'm Keaton Hirishand. I'm the co-head of advisory and project finance in Societe Generale. I look after the Europe, Middle East, and Africa region, and the main job description is long-term capital fundraising for energy projects all over the continent.
Good morning, Fifi, and good morning, everyone. My name is Gilbert Kamuntu. I'm the Chief Commercial Officer of the Uganda National Oil Company, UNOC. Responsible for all the commercial and economic analysis for all of the projects in which UNOC has commercial interests.
Good morning, everybody. Good morning. I'm Aaron Singe. I'm Chief Oil Sector Officer at the African Development Bank. I'm advising government to maximize the outcome of the development of their petroleum resources, and a part of my work is to advise them to design good policies to attract investment.
All right, thank you. And now that we are all acquainted, let's get into the discussion. So we're looking at the appetite and really trying to understand the appetite of lenders to fund projects of this scale. And perhaps as you do speak to that, particularly Shirley and Keaton, you can talk to us about some of the projects currently on your books right now by way of the oil and gas space.
I don't know if I can then maybe just start. I think it's very exciting for us, all the developments happening in the African, on the African continent. I think everyone is talking about Mozambique, the LNG projects that's currently on its way. And I do think we've seen that there's very big appetite for those projects. And clearly, needless to say, those are very transformative for any country. I do think, the international banks, the DFIs, there's so much appetite, for projects that is transformative, that's got good sponsor involvement in countries where governments, for example, are very interested in growing their economies. And a combination of all of that's going to be very important to make sure that, it actually gets all developed.
Sure. I mean, Keaton, you can give us more details about the whole excitement around Mozambique, given your proximity to some of the deals going on there, but tell us more.
Sure. I've personally been involved in Mozambique now for the last 7 years, and I think that is actually a fairly good time frame, given the size of the resource that was discovered there to get that to commercialization, and we have 3 sets of commercializations underway. I work on the Area 1 development there, and I'm pleased to say that we've managed to raise over $14 billion of long-term financing for a country whose GDP is about $11 billion, so I think that puts it in perspective. So there's clearly appetite. There are techniques that we do have to use in terms of mobilizing these financing sources. In the industry, we call them multi-source financings, and very simply put, it's where you're bringing multiple different types of investors together. So from things like export credit agencies, multilaterals, development financial institutions, and then the whole banking gamut as well. And by banking, I mean local banks, regional banks, international banks, and that's how we've managed to put the package together. We had a terrific response from markets in the proximity as well, like South Africa. Terrific support from Shirley and a number of the South African banks there. And I think what is also quite incredible is that we've managed to raise 18-year money for this development. And when you're looking at these sorts of mega projects, you have to take a long-term view as to how it's all going to pan out, as well. So today, there isn't much of a local consumption market in Mozambique, but clearly in the future that will change. So, I very much describe the exercise as a crystal ball gaze as to what can happen over that period of time. But it has clearly caught the imagination. It's transformational not only for the country, but also globally as well. And the reason I say that is, firstly, the gas resources are very big. It has the potential to propel Mozambique into one of the top 5 suppliers globally. And this is where you have to take the global dynamics into account, because a lot of countries that were previously producing, like Malaysia and Indonesia, now have their own demand and have actually turned from exporters into net importers. So Mozambique's timing is actually very good in that regard, as well. So there's, we can go into it in more detail, but there's clearly appetite there.
Definitely. And I mean, Gilbert, talking about Uganda, a number of new projects and deals being announced from your country this week as well. But give us a sense of the national oil companies' appetite for financing, and I imagine it would be by equity on your part.
Yes, thank you, Fifi. So maybe by way of introduction and context, I'll just say a little bit about the national oil company UNOC. So UNOC was established under the Upstream Petroleum Act of 2013, and we are 51% owned by the Ministry of Energy and Mineral Development, and 49% by the Ministry of Finance, Planning and Economic Development. UNOC's projects span the entire petroleum value chain. So we have commercial interests in the upstream, commercial interest in the midstream, in the Uganda refinery and the East Africa crude oil pipeline that's being developed. And we also have interests in the downstream, that is storage terminals, one which is already existing of 30 million liters, one which we're developing of 110 million liters. And we're also getting into bulk trading, which is the importation of gasoline and gas oil for the existing market. So I say all of that to say that, therefore, when UNOC looks at the strategy for funding, the envelope we're looking at is just under $800 million for all our commercial interests in all the projects, spanning a period of time over 3 to 4 years, but that's what the envelope looks like. So we differentiate between our funding strategy, which is for our equity, and our financing strategy, which is where we go with our equity partners and approach the lenders. And for each of those projects, we have a specific funding strategy. So, for example, the funding strategy for the upstream would be different for the midstream because of the way the upstream is structured. We have certain carry mechanisms, they're called, in the upstream, which give us some flexibility until a certain specific point in the future when our liquidity is much better. And then for the midstream, which is the pipeline and the refinery, we have both a funding strategy for our equity interests and a financing strategy. From where we sit as UNOC, we think and we have experienced a very large appetite from both the funding side and the financing side. So we think there's a lot of interest to fund the 800 million envelope of funding that I spoke about. And I think that is mainly driven by strong project fundamentals. I think when most financiers look at our projects, it's strong project fundamentals. The refinery is very robust in terms of rate of return, and also the pipeline clearly is attached to the upstream and therefore has a lot of upside and potential.
Right.
So at this point in time, we're not struggling with options. What we are doing is developing a strategy that allows for the cheapest and most flexible funding of our equity at the right time, obviously. So just to answer your question, no, we're not having any challenge with sourcing for funding. And we have a very good strategy led by our Ministry of Finance and our Ministry of Energy that is looking at the various options of funding.
And Aaron, give us a sense of, the African Development Bank and its allocation to fund the oil and gas space. What's that looking like in terms of the numbers and also the funding structure? Take us through your model.
Can you come again, please? Can you come again?
Yes. In terms of the funding from the bank in the oil and gas space, what is that looking like now?
Yes, we are all aware of the calls for transition to cleaner energy and low carbon economy. And the bank is also dedicated to move in that path. And therefore, it has influenced the strategy of the bank in the oil and gas sector, in the mineral sector in general. Recently, our president said at the UN that we are no longer supporting coal project. For the oil and gas project, recently, the Mozambique project is one of the projects which we have provided significant support, which has also really enabled the project to kick off and move forward. So we focus more on the side of institutional support and the structuring of the financing of the project. We are currently supporting Senegal also, and building the capacity of the government and the private sector organization to participate in the oil and gas sector. And we encourage them to go for the public-private partnership. And in that, we can play an important role by building the capacity of the state in understanding, structuring, and managing the risk and the funding side of the public-private partnership. That's what we do so far. Thank you.
Yes, and I'd like to get into that in just a moment, but as you did raise the issue of, the energy transition and funding more cleaner projects, let's talk about that and how that is affecting the cost of capital now, the issue around climate change. How are banks looking at it when an investor from the oil or gas space comes knocking on the door for money? Is it making it more expensive, or is it making you turn projects down a lot more? How is it affecting the cost of capital?
From APSA's point of view, clearly the whole concept of sustainability is becoming more and more important. I think the reality is, and I think my colleagues sitting next to me will agree, that we on the African continent, and there's still a very big reliance on fossil fuels, which we can't necessarily get away from. I think, all the technologies to get to cleaner air, to get to cleaner, and the way that our sponsors and, the operators will develop those assets, that will be a very big determining factor. I do think from a cost implication, if we fund a mine, if we find an oil and gas project, etc., I don't think it's a costing is the factor of, the type of project currently that we're funding. It becomes a matter of in which country it is, what is the international relations on that country, if there's ratings, from ratings agencies, that's poor, etc. But ultimately, I do think all the bigger projects that we've seen in Africa and Mozambique included, it becomes a very big combination of the country rating, government involvement, sponsors, off-takers, and all of that's a determining factor in the actual pricing of the capital that we have to issue. So it's a very big combination of few things.
Is it any different for your bank or similar?
It's a very topical question, as we all know. I don't see it as a cost of capital argument. I see it more as a policy issue. And clearly, certainly over in Europe, we as financial institutions are under increasing pressure to ensure we're playing our role in the energy transition. But I think transition is the key word. This is not something that's going to happen overnight. And if you come back to Africa and you look at the situation here, and I was reading one of the IEA reports that said 3 out of 5 people in sub-Saharan Africa don't have access to electricity. And we all know access to electricity is directly correlated to economic growth. And if you look at the resource base on the continent here, it's clear that gas, by way of example, is going to play a huge role in terms of being a bridge fuel for the continent. I often like to use the analogy that's been applied to Africa before, where they used to say Africa never had landlines, they went straight to mobiles. And how do you extend that into the energy transition? Well, again, I think it's going to be a gradual case, because when you look at it, the reality is that they're complementary. When you look at gas, when you look at renewables, issues around intermittency, of course, issues around grid stability, there are a whole bunch of issues that actually make the two extremely complementary. And if you look at the last 5 years and you look at the number of discoveries that have happened in the continent, Africa's increased its resource base massively. So there looks an obvious path to me in terms of how the continent will develop and ensure that that statistic that I mentioned can be significantly improved upon. I think that is absolutely key. So Fifi, coming back to your question, it's an issue of policy, alluding to what Shirley said about the principles under which these projects are developed. That is incredibly important from an environmental and social aspect. The same way our clients will say they want a social license to operate, we're exactly the same. So the sustainability and that applies on multiple levels. Let's
Sure.
be very, very clear on that. And we can unpack that further. So it's really more a point of policy, today that is clearly evolving fast. But I see, as I've described, a happy medium here, certainly for a period of time, where the two will work arm in arm.
All right, so just to shift gears a bit, Aaron also mentioned the importance of, public-private partnerships in this space, given that a lot of money is involved. So help us understand, Gilbert, from UNOC's perspective, how are PPPs being looked at there? What is the role for the private sector in some of your projects, especially as I imagine you'd wish to leverage on their much larger balance sheets?
Yes, thank you very much. So from UNOC's perspective, I think our strategy is to go down the project financing route. So in the PPP phase, which is normally used for large infrastructure, I think what we intend to do with our projects is use the project finance strategy. So we expect that UNOC, as the commercial arm of government, is going to be the entity that is a shareholder in some of these large infrastructure projects. And by that, I talk about the refinery, as I mentioned earlier, 60,000 barrels per day, capital requirement of about just under 4 billion, 3.5, and the crude oil pipeline, which is also about just under 4 billion, 3.5 as well. We expect that we are going to go down the project finance route. By that I mean that UNOC, on behalf of government, intends to take a commercial position as a shareholder, 15%, for your information, 15% in the crude oil pipeline, and about 40% in the refinery. And then jointly with the rest of our shareholders, we are going to go out and go out and raise debt for the projects. So that is the strategy that we're going to use. We believe that will result in a robust commercial and financing structure. We believe that is the best strategy for delivery of the projects. Just going back to some of the other issues that you mentioned, such as social license to operate, some of my colleagues mentioned here. We're also doing a lot of activities in that space just to make sure that we have sustainable projects. Doing a lot of environmental and social impact assessment. In fact, I should mention there's a public hearing going on right now as we speak for the crude oil pipeline, doing a lot of resettlement action plans and really ensuring that we have sustainable projects. So I think from where we're sitting as UNOC, we think we have a robust structure for delivery of the funding and the financing. And what we're doing is just going through the process right now of negotiating the commercial contracts that are going to underpin all these projects.
All right, so I mean, a lot of positives there that you did mention, but of course the funding in the space does remain an issue, and access to capital for many does remain an issue. And I suppose the question and the understanding that we want to know from you guys is, what are the main challenges as you see them? Aaron?
The challenges to funding?
Of access to capital, yes.
The challenges of access to capital in our industry, basically at the state level, in our opinion, the risk that the project has. Africa, basically, at the moment, has one of the lowest geological risk because we still have the chance to find large reserves in Africa, and some of the provinces still have good and simple geology. The main risk lies on the political side, the regulatory side, and fiscal stability. So when you look at it and looking at the purpose of the investment, we need to have commensurate reward to the risk we are taking. So the achievable oil price as well, and efficiency of the operations in the African continent are also some important issue to access to the capital, because security risk in some countries can drive the cost of operations. And if you want to look at the normal economics of a project, where we look at the dollars per barrel and benchmark with the achievable oil price to see the margin, basically looking at this in this perspective, we'll say that there are a lot of challenges in this aspect. However, there are also opportunities, because Africa is growing, it has a young population. So, and looking longer term,
yes,
and looking also at the opportunities provided by the energy transition, we could bring in some externalities in the economics that reduce some of these challenges. Thank you.
All right, so let's just, I mean, he mentioned fiscal challenges, political instability challenges. We know all about that right now. Currently, surely, I mean, with Moody's recently coming out with its not so great reports about South Africa's macroeconomic fundamentals. I mean, to what degree do you agree with some of the challenges that Aaron listed there, particularly by way of the fiscal and political instability, and how is that affecting how you are funding projects in the space?
No, I definitely agree with the concepts that was mentioned by Aaron. I think the ones that I would like to highlight maybe a little bit more is definitely when we go into transactions from a funding point of view, you know, and funding is obviously a very big word because it can be corporate, it can be reserve-based lending, it can be via ECAs and, you know, project finance, etc. We look at it, for example, the country stability, the regulatory environment that that's being operated in that country, as well as a proper oil development framework, must all be part and parcel of this. I do think all our African countries, you know, where there's especially the gas and the oil exploration and development happening, it's very important for those countries to ensure that there's a stable environment, you know, for banks to come in to fund, for sponsors to come in and increase exploration as well as their feeds and fits, for example. Country ratings, IMF involvement, you know, international relations that we've mentioned, all going to be very important. All of these projects will have a very big influence on the fiscal of that specific country, and that's why we've seen if national oil companies and governments are involved in these bigger projects, it actually becomes a much bigger success story, and it's very evident of the later ones that's coming into play now as well because of that active involvement in the process. By national oil companies, and I'm not trying to obviously focus on Uganda specifically as well, there we've seen as well, there's various means of doing it. Apart from carry arrangements, you know, there's equity options, you know, that can be exercised, you know, debt capital markets, you know, various ways of assisting national oil companies, you know, for the contribution depending on their arrangement in these developments.
All right. And I mean, when we talk about ratings, you talk about the importance thereof. And I'm so interested in how the project that you were talking about in Mozambique got so much interest from so many parties and players, given that that economy essentially is in default. So their ratings didn't apply in terms of attracting money in. Why?
Yeah. No, Fifi, you raise a very good point there, but I think it very much plays on what we've just been discussing, i.e. an enabling framework. The government of Mozambique had a very good vision when these resources were discovered and basically put in place, you know, it's in the public domain, they put in place a decree law. And that decree law was designed effectively to facilitate these investments. Because you know, coming back to what investors want, investors need the stability and they need the certainty. That's the only way that you can raise long-term capital, you know, for projects of this nature. And in many ways, if I'm to advise developers here today, it's really saying, okay, the project's located in a difficult country, but there are multiple structural features that you can introduce to, in many ways, to isolate the sovereign rating. And we very much did that off the back of the Mozambique development. We cultivated a shared vision with the government, which worked extremely well. If you look at it, you know, we'll be, by the time we're through mid-year, there'll be 30 billion plus raised as a result of that enabling, you know, framework. So there are ways in which we can do it. Ratings obviously play a role if we're going to go the capital markets route as well. And personally, I think that is a real deficiency on the continent here, and something that I'm almost making it a personal mission of mine to say that the capital markets need to play a bigger role here. And often, investors in that space, there's the political risk we've talked about. There is also the fact that there is significant construction risk associated with these projects. So often, and if you look at the model that's adopted in the US, what happens is you have banks constructing, taking the construction phase, And then once the projects are complete, they're refinanced into the capital markets. It's a great model and something that we would love to see a lot more of in Europe and in Africa. So that's where ratings can be a key enabler. Today, because of where a lot of these ratings are, you end up in the space of high yield rather than high grade. And the problem with high yield is it's expensive. So it wouldn't really be a viable option for a lot of the projects today. But again, once some of these projects start coming on stream, then that has to be part of the vision, as well. So coming back to the point, it's the enabling framework. It's having that joint vision, because clearly, we're not looking at this on a 6-month or 1-year basis. It's a very, very long-term game. And that is exactly what has to be set in stone from the start. So cultivating that stability and then having a very consistent vision, I think, was key to attracting that level of investment.
Right, and I imagine that also favorable tax terms also play a key role in bringing investors, particularly to partner with national oil companies like yourself. So just give us a bit of an update and understanding on the taxing framework and regime there in Uganda, given the issues around certain companies and the impasse involving a tax dispute that I won't go too much into, but you're welcome to do.
Sure. So I think, Fifi, there's two things maybe to mention. So there's one, which is an ongoing tax discussion, which I don't think we need to touch on. But maybe what I can focus on is what are the governments of Uganda and Tanzania doing to support the projects, because you mentioned a very important thing, which is taxation. So if I use as an example the East Africa crude oil pipeline, the government of Uganda and the government of Tanzania in May 2017 signed an intergovernmental agreement which was to provide government support, bilateral support for the project. Within that agreement, a certain fiscal incentives, shall we say, some tax concessions that both governments have given to make the project economics look better for both the shareholders and essentially the project. And also certain government supports that have been outlined in the agreement, which should make both the shareholders and the lenders more comfortable to invest their money in this project, 3.5 billion. So I think that's evidence that the governments of Uganda and Tanzania can present to show a recognition of how important, as has been mentioned today, the taxation and the stability of that regime supports the project. And then also, to go into a little bit more detail, I think also just below the intergovernmental agreement, the host government agreements that are going to be signed for the project, on one hand in Uganda, between the government of Uganda and the project developers, and in Tanzania, between the government of Tanzania and the project developers. So within those will be even more, shall we say, at a governmental level, government supports. And again, from the perspective of Uganda, there are certain things that we recognize are important to support the project. Things such as, expropriation protection and stabilization clauses to provide stability and arbitration mechanisms. So these are all the things that we are discussing with the objective of making the project attractive for both the shareholders and eventually the lenders. Because as I mentioned, we strongly believe that the project economics or the fundamentals are good. The development costs are low for the upstream. You've got a lot of upside because of a lot of the unexplored acreage in Uganda, so the pipeline has a lot of upside. And so what we are trying to do, and UNOC is part of the negotiations, is develop a package of incentives and a stability, as has been mentioned, that provides comfort for the life of the project. So I think all of these are going to be enshrined in a package of commercial agreements. And these are separate from any other taxation discussions that are going on, because those are specific to specific transactions.
Right.
So we try and keep those separate in terms of our discussion.
All right. But we do look forward to the developments on the specific transaction. We do have a few questions coming in from the floor, and we thank you for that. I was just hoping that Shirley and Kaiton just get your mind around Nigeria's flare gas commercialization program. There's a view from or question from the audience on what you think about it, whether you think that there's strong fundamentals here. So have a think about that in just a moment. But let me come to you, Aaron, because there's a question also for you as the African Development Bank. The question reads, as an African-focused bank, is the AFDB advising African countries that rely on oil revenue like Nigeria to hedge their exposure to price risk?
I didn't get you well.
It is about countries that are heavily reliant on oil for revenue. Is the AFDB advising them on how to hedge against this?
Yes, I'd say yes. When we look at the different options for financing projects, so we have the reserve-based lending option for financing project, and the package of reserve-based lending hedging comes in to increase the confidence of the investor, especially with the oil price, which is struggling to stabilize. It is, in our opinion, also an important instrument, especially for projects that need just development and production. So we've thinking loud about this option. I met in this forum. I met quite some independent Nigerian producers looking at many different options. And I think we will intensify our effort in this direction. And the concept is there, and we acknowledge it increases the confidence of the investor.
Right. And for Shirley, Kaiton, any views on Nigeria's flare gas commercialization program? Kaiton?
Sure. Yeah, no, I'll go first. I mean, my view is that, in today's day and age, this really should have been eliminated by now. It's profligate. It really should not be happening. So we actively support the Flares Out campaign. We worked on a couple of developments on the western side of Africa. We did one in Angola, which was effectively an associated gas development. That was gas that was otherwise being flared, that got turned into an LNG development there as well. So these initiatives have been going on for a long time, and I think, suffice to say, we actively support those developments. We actively support the funding of those developments, and we're very much, reinforce the vigor behind, the Flares Out program.
No, I think our view is exactly the same. Instead of doing that, there's developments that can be put in place to make sure it's actually helping for the growth of the economies around it as well.
Right, but bringing it back to the issue of capital and access thereof, especially as we speak about inclusivity, surely we need to include our own here when it comes to women who are looking for money to partake in these projects at various levels. What is the bank's, ABSA Bank's thinking around that? How are you treating financing women, which often we hear that it's a lot harder for women to gain access to finance than it is for men, unfortunately?
I think it becomes a very big question around the ESG type of principles out there as well. Clearly, from a social point of view, we are talking about diversity, which would include, for example, women specifically. I do think the same principles would apply, when it comes to, what type of reserve we're sitting with, the country that it's in, even if it's South Africa or many of our African countries like Ghana or Mozambique, etc. I think the principles around the project would be the same. And for me is, if it's a woman coming through as part of a bigger project to request funding, etc., that cannot be a turn down just because of the diversity aspect. It becomes, we need to look at it on its merits.
All right, so it's all about the project. And would you say that the same applies in terms of looking at smaller businesses? Is it about the fundamentals of the projects that will determine whether they get the money or not?
Yeah. I've been 13 years in banking, and I maintain the same mantra today, which is good projects can always attract capital. So it is simply about the project. It's about the fundamentals. If these developments have got to withstand scrutiny for a long period of time. So it really does boil down to what are the fundamentals. How does this look in terms of a long-term forecast? How well do these projects stand up to periods of downside in pricing or lower sales, etc. But when so the analogy, Fifi, very much is also for the smaller developers as well. So when you're talking, a lot of these people will talk to me and say, "Oh, you're talking about 10 billion and 14 billion. Well, I'm only after 20 million for my tiny investment." Absolutely right. And so it's really just analyzing that on its merits. And I think a number of the banks on the continent have now started dedicated schemes for SMEs. And I know certainly the projects I'm involved with actually have made it effectively a regulation in terms of crowding in more of the SMEs to these developments. So I do think it's a key theme, one that we support. But clearly, if these people want a seat at the table, you've got to be very clear about the value proposition. That's all I'd say.
I just want to add maybe as well, and linking with Catherine, for example, as said, there's clearly all, for example, APSA has got an enterprise development program running as well, and that's now linked to many of these bigger projects that we're seeing, where we understand you get contractors and subcontractors, and that's really where a lot of funding is needed as well, for these bigger projects. Ultimately, there is a look through up to the bigger project, and evaluation of the subcontractors, and the subcontractors, for example, is definitely done on a different basis, take into consideration the bigger project.
All right. So essentially, there is an interest to bring the smaller guys more into the circle, but it sounds like perhaps the smaller guys need to polish up and brush up on their value proposition in order to get a seat at the table. But your views, Gilbert, Aaron?
Well, I think, as I mentioned, UNOC has a whole array of projects. And not all of them are of the size that we've been talking about for the past 40 minutes. Some of them are much smaller in comparison. But I think the point that was made about the project fundamentals still stands even for the smaller ones. In the sense that if we take, for example, I mentioned that UNOC has interests in tanks and tank development. I mean, the capital requirement for tank development is not in the same ballpark as, say, refining or crude oil pipelines. It's in the hundreds of millions. But still, there needs to be a strategy for that. And still, it still has to be a strong project. So we from UNOC's perspective, when we look at this, I mean, it's not an SME, but we're talking about headline size of hundreds or tens of millions. When we look at our funding and financing strategy for those smaller projects, we always start with, is this project economically viable? What is the rate of return? And if that is strong, we then build on those project fundamentals to then talk about a funding and financing strategy. That strategy could be, for example, to use our own internal funds, our equity, to just develop the project. or it could be to go into the local market and do domestic borrowing. I don't think for all our projects we intend to go the project finance route because it has its advantages and disadvantages.
Yes.
Project finance can be very extensive and has long lead times, and perhaps we don't want that for some of our smaller projects, and we don't need that. It might not even be attractive for some of the project finance size of lenders. So what we try and do is look at each project on a case-by-case basis and determine what we believe to be the best funding strategy for that project.
Yes, and Aaron, just a final thoughts from you as the AFDB in terms of how you treat smaller businesses, perhaps maybe words of advice in terms of the boxes that they need to make sure that they tick so that they do get some form of lending from you.
What they should do to get some form of lending from us?
Just the criteria, the basic criteria that small businesses need to meet.
Yes, we are a development bank. And in this respect, we look at the development aspect, the environmental stewardship also of the project. And we also look at the overall economic beneficiation of the project to the country. This means we don't have a standard way or some standard, some radical criteria to say that project X or project Y will benefit from our support. Any project which aligns with our principles and our strategy is a potential project to be funded. And we look at our 5 priorities as a bank, which so that it can advise in which area the project can be developed, and the other aspect that can make the project attractive to us. We talk about lighting up Africa, feeding Africa, integrating Africa, industrializing Africa, and improving the quality of life in Africa. So the statistics say that we have about 600 million youth unemployed in Africa. So this is an area where if a project shows the youth employment sufficiently bold enough, I think that such project will easily benefit the support of the bank.
And just, finally, as we wrap up this conversation, let's just throw forward to some of the trends that we are seeing and that we can expect to develop, and dovetailing in the broader theme of the trends, where the money is flowing. I know Mozambique is a hotspot right now for attention, and I know naturally you'll speak on parts of Uganda, but Shirley, Kate, and then particularly Aaron, just give us a sense of trends in this space and where the money is flowing, where it is seeing the most attraction.
Apart from the ones that you've just mentioned as well, we've definitely seen a bit more development going down the value chain as well. For example, there's a relook of what should happen with refineries and the pipelines and where it should be. And the East Coast is obviously the most obvious one when it comes to the pipeline discussions. I do think there's a sense of a lot more things happening on the Nigeria side, a lot more happening on Senegal and Mauritania, for example. And, from our side as well, we've seen that apart from our normal presence countries where we're in, we would definitely go outside, of those as well, and just make sure that we look at where the reserve is, for example, and the costing to actually get the per barrel out, to make sure that whatever project we invest in, that it's going to be feasible in an environment where we know prices actually fluctuate.
Right, perfect. Just to interject there a bit, and I'll come back to your outlook on the trends. Going back to the role of smaller players in the sector, there's another question from the audience regarding the fact that, yes, they agree with you, the value proposition of the project's very, very important, but what are you doing in your respective roles to ensure that the junior players actually meet these standards? Caton, and actually everyone can comment on that, and we'll finish off with the trends.
Okay, I'll go first. So the projects I've been involved with have set up very specific criteria for screening some of these SMEs. So they would generally stipulate certain standards. They can be some of the health and safety standards. There can be some issues around financial standards, etc. So it's important that when these sort of supplier lists are put together, these companies are very cognizant of those and make sure that they try and fulfill those criteria so that they're included. 4 or 5 developments that I've worked on just in the last 5 years on the continent have all had specific systems set up to identify these suppliers. So it's there, the focus on it is there. Because again, when you come back to these projects, how do you develop the local economy? How do you develop the regional economy? It's exactly the SMEs. Mm-hmm. So a lot of attention is put on it. Obviously, a lot of this news is very widely broadcast as well. So I would encourage those people to come, reach out to those individual projects and make sure, they're on the radar screen, get an early sense of what the criteria will be, and then make sure they do the necessary to fulfill those criteria.
And from the national oil company's point of view, what are you doing to make sure?
Well, I think what I'll do is I'll talk more at a general level. I think this is probably a good place to talk about what some of our sister institutions are doing in the local space to ensure there is a space for SMEs to participate. And I think, for example, in Uganda, the Petroleum Authority of Uganda is the custodian of the National Supplier Database. And they have made great strides in terms of creating a space in which SMEs can participate. Because I think it is one thing, I think actually access to finance is probably further down in terms of the chain. It's first having access to the opportunity. And so through our sister institution, the Petroleum Authority of Uganda, who were on this stage actually yesterday, and there's been some great strides to develop a national supplier database and understand what the talent pool is in Uganda, to at least make sure there's access to the opportunity. And then with respect to access to finance, there are many financial institutions in Uganda. I will not plug them on this stage, but they do exist that have incubator programs that are doing exactly that, which is to make sure that the SMEs not only have access to the finance, but know how to approach the lenders and package the opportunity. So from Uganda's perspective, it may not be our responsibility as UNOC, but like I say, from the ministerial level and from the regulatory level, a lot of work is being done to make sure that the SMEs also participate.
All right, so just fantastic. Just a final word on the role of smaller players. Aaron, you spoke about the 5 principles that the bank looks through when evaluating projects. So how is the bank making sure, or what part is the bank playing in making sure that some of the smaller guys who come knocking on your door for money are able to meet those 5 principles?
So yes, that's we intensively work on the institutional and private sector capacity building. We also provide advocacy in this respect, where we get the stakeholders informed also about the requirement And with partners, we provide training programs. Like in Uganda recently, in Uganda and Kenya, we had in collaboration with the Strathmore University and Stanbic, suppliers capacity development program. There, we build the capacity. We help build the capacity of the suppliers,
Okay, so
not only to meet our criteria, but also to be able to get the opportunities from this. Because if we have the money, but they have no opportunity, there's no business. So for them is to move from where they are
yes.
to where they should be in getting opportunities with the oil and gas companies. And if they have opportunities sometimes with the oil and gas company, they may not need our financial support because some other banks are there. Some other banks can provide them this support. As he's talking of suppliers database, we also support countries in the framework of our local content a development flagship project. Right. We encourage countries to put in place suppliers database.
Okay, I'm just gonna pause you there. Apologies for that, just in the interest of time, as we are left with around 2 minutes. But it is encouraging to hear the work and the initiatives that the African Development Bank is doing by way of training and bringing smaller players closer to that opportunity. Going back to the last question, which will be the final word on the part of you, Katan, and also Gilbert. We're talking about the trends and the outlook in the space, and as you do reflect on the trends, Katan, if you can just also answer, going back to the Nigeria flare gas commercialization program, there's a question from the audience. Would you advise them to be putting their monies here?
Great, okay, so there's a few things there, so I'll go through it very quickly. Shirley touched on some of the geographies that are of interest at the moment. I think from a sector standpoint, I think a lot of the investment needs to actually happen mid and downstream now on the continent, because we've got to create anchors for these outlets. So I think, a lot around power, frankly, seems to be the obvious one, and then alluding back to some of the complementarity that I mentioned vis-a-vis renewables. Second point, which is more sharing experience with you over the last 12 years, what I would advise developers is unpack your value chain. And what I mean by that, don't bundle it all up, because investors are quite discerning on what risks they will and won't take. A lot of investors may not look at pure commodity price risk, but they will look at infrastructure and energy-related infrastructure. And bizarrely, this is actually a very, very neat way of improving your rate of return across the value chain, right, because you're basically slotting in people that are more suitable for that area. And I know we're running out of time. Would I put my money into the flares? Yes.
Well, there you go. Hope that's good advice. I don't want to cost anyone there. Final word, Gilbert.
Well, in 5 seconds, yes, invest in Uganda. There's a licensing round ongoing right now, second licensing round. It's very attractive blocks. There's a lot of upside. The infrastructure is upcoming, so now is a good time to invest.
All right, thank you, and thanks so much for your insights, and thanks so much for your time. Of course, that bringing us to the end of the conversation here. I mean, there has also been comments around the role of technology and fintech, and to what degree that this will play in leveraging finance, and these are some of the conversations that we will continue to unpack here at Africa Oil Week. But for now, from our audience and from our panelists, it is bye for now.